High Mount Research Market Insights video for July 27th, 2023. Hey, everybody, Willie Dowitch here. Glad you have tuned in. Glad you're listening. It's Thursday, so it's time for Three for Thursday, time to take kind of a high level, brief look at what we're seeing in the market this week. And this week, we've got some things to talk about as we normally do. A couple things for the focus today. This idea of fading momentum, but still strong breadth. We're going to look at that from the perspective of some of our sector work, but then also tie that into what we're seeing in the market overall from a breadth perspective, sentiment from a strategic perspective, from a cyclical perspective. Sentiment is a headwind right now, but from a tactical perspective, we want to look at things a little bit differently. And there we want to go with the crowd until it reverses at an extreme. We're going to take a look at some of the latest sentiment updates that we've seen this week to kind of put that into context. And then finally, just from a like what to do perspective, more uptrends equal more options. So there's as the rally's gotten broader, as more areas of the market have turned higher, there's more ways that we can take advantage of tactical strength. We'll take a look at one of those, mention a couple more as we go through the conversation today. So let's get into it. We will start with our sector level trends. So here at the top, just for context, that's the S&P 500. Orange line is kind of our momentum trend indicator based on sectors. And then the blue line is our breadth trend indicator based on sectors. And you can see a couple of things here. One, momentum tends to be more volatile than breadth. It moves faster, so that's okay, and we can acknowledge that. The second thing is we've seen some, at this point, false breakdowns in breadth over the last few weeks. Momentum over the last few weeks, breadth has remained strong, still remains strong. So as we go forward, as volatility quiets down, we would expect momentum to maybe slow down a little bit. So moving kind of towards the zero line from a momentum perspective, not altogether bad or unexpected. The question is whether or not breadth is going to remain strong. So we're seeing that so far from a sector level perspective. We're seeing that from an advanced decline line, advances and decliners on the S&P 500 perspective. We're now in this longest run of more advancers and decliners that we've seen since 2017. So we continue to just kind of churn beneath the surface, churn higher, more stocks moving higher than lower, more stocks making new highs than new lows. So breadth beneath the surface remains okay. From a sentiment perspective, like I said, positioning, long-term positioning, that's a headwind. From a cyclical perspective, yeah, we probably got more optimism than would be healthy at this point as we've moved quickly from pessimism to optimism. From a tactical perspective, what we want to watch isn't just to see the emergence of optimism, but we want to see that reverse at the extreme. That's the way Ned Davis has always talked about. Go with the crowd until it reverses at an extreme. Couple examples this week of the crowd getting really to extremes. One came out earlier today. That was the NAIM exposure index. That's above 100 now, first time since November. What we're showing here is a consensus bullish sentiment index. That's up over 70. That's the highest level since mid 2021. This has a pretty this one moves a little slower than some of the other ones, slower than NAIM, slower than AAII. And so when it does reverse, we want to pay attention to it. At this point, we're seeing optimism, but it hasn't reversed yet. So from a tactical perspective, still feels like something we lean into, not start. The market isn't at this point something we lean away from, especially given that we're not seeing that deterioration from a breadth perspective. So what's an investor to do with all this? Well, as we talked about at the beginning of the week, we're seeing more uptrends. We're seeing Canada improve. We're seeing commodities start to improve. Commodities move to a new 13-week high. We're showing PDBC. That's a commodity ETF. You can see not only did it break out last week, got above its 40-week average, it is adding to that this week. Momentum is turning higher. It's moving higher relative to the S&P 500 as well. Long-term trend in commodities have not turned higher yet, but from a tactical perspective, we're seeing improving relative strength. We're seeing improving shorter term trends. So we're adding that to our tactical portfolio. Canada also, in the chart deck associated with this video, I have a similar chart for Canada, seeing that breakout there. The long-term trend has turned higher. So So we're following strength there as well from a tactical perspective, from a cyclical perspective, from a strategic perspective. We'll wait till the end of the month and reevaluate the portfolios at that point. But from a tactical perspective, leaning into the strength that we're seeing from commodities and from Canada at this point. So that's the 3 for Thursday video for this week. We're seeing still strong breadth even as momentum's cooling. Sentiment, optimism continues to build, but from a tactical perspective, go with the crowd until it reverses at an extreme. And then as we think about this from a dynamic, tactical perspective in terms of managing money, we're increasing exposure to commodities, increasing exposure to Canada, reducing exposure to Japan, taking money off the table from semiconductors as well. So that's the video. Thanks for tuning in. Thanks for listening. And I will talk to you again next week.